until we come, you're in there.
Really, really interesting announcement out today. Without further ado, please welcome Managing Director and CEO Alexander Scanlon. Thank you, Alex.
Thank you, Harry. All right, thank you everyone for coming out. I hope a lot of you had a good time last night. I think many of you were here, and thank you for joining us. High-level introduction to Barton Gold. We are a pure-play gold, pure-play South Australian developer. So we took a view on gold quite a long time ago, which we discussed last night. But long story short, we wanted to consolidate an entire historical gold district while no one was looking. So we spent about 3 years between 2017 and 2020 doing that. We essentially bought every significant historical gold asset in the central Gawler Craton of Southern Australia. For those of you who aren't familiar, South Australia is the home of the Gawler Craton. This is obviously a very well-known geological domain. It's the home of Olympic Dam, and BHP has essentially consolidated the IOCG province, the Iron Oxide Copper Gold province, which is sort of on the east side of the central Gawler and on the east side of the Stuart Highway. The west side of the Stuart Highway, the western Gawler Craton, is actually an historical 130-year-old high-grade gold-producing district, but it's never been sort of rationalized at large scale. It was a series of smaller high-grade operations. We bought all of that. We bought the only gold mill in the region, and then we said, we're not going to take it back into operations. We're going to put that mill on care and maintenance. We're going to step back. We're going to build a much larger platform because we want to be targeting something that is of institutional scale. So we're not targeting 50,000 ounces per annum. We're targeting 150,000 ounces. We've now built up that platform. We have a 2.25 million ounce development platform. We have an existing mill, and we've identified the second mill that we're going to build so that we can go from stage one, startup operations, get going, produce cash flow, and then fund stage two development. The idea being that we now rotate that existing infrastructure that we have in place to leverage it and unlock that 150,000 ounce per annum pathway without having to jump directly to funding the development of 150,000 ounces. We've also acquired quite recently the fourth sort of major historical gold asset in that sort of island chain there. That's the Wudinna project, which I'll come back to. In terms of our capital structure, as of about 6 minutes ago, we have welcomed some new institutional investors to our register. We have about 240 million shares on issue. At an issue price of $1.25, we have about a 300 million Australian dollar market cap, about a $277 million enterprise value. And the key thing about our capital structure is that we have a unique combination both of a strongly consolidated register but very high liquidity. So about 75% of our shares are held by board and management, institutional, and sort of family office high net wealth investors. But we also have several thousand retail shareholders. So we trade nearly $1 million worth of shares a day. And this is really a product of several years of steady, reliable progress where we've seen institutional investors consolidating our register around both board and management alignment around that steady progress, but also some of our unusual approaches to sort of protecting shareholder value. We actually monetize our assets. So with the exception of the $17 million placement we announced this morning, over the past 4.5 years, we've only raised 13 million Australian dollars. We've actually earned more money from our assets. So we've made our assets pay for their own progress, and this has allowed us to really minimize dilution as we've moved along here. So as you can see, this morning, we have quite a strong bench of support in terms of institutional investors. Our placement this morning was led by Franklin Templeton. In terms of our capital structure, the human capital is really the most important component here. We have built a team of really experienced South Australian professionals who have hundreds of years of experience finding, permitting, financing, building, and operating major mining assets. We have a particularly strong pedigree in gold and in South Australia. Where those two themes intersect is in the history of gold in Australia. Normandy Mining was Australia's largest gold producer. It was the largest gold producer in the Southern Hemisphere in the 1990s. It was purchased by Newmont in 2002 as a 2.5 million ounce per annum producer. Half of my leadership team are from Normandy and Newmont. When we look at this on a map, you can see in the top left corner of this map are the three assets that we originally acquired. In the top left corner is our central Gawler mill adjacent to the historical Challenger gold mine. So Challenger produced about 1.2 million ounces of gold from head grades of between sort of 5 to 10 gram per ton in an open pit and underground. We kind of immediately didn't talk about that once we bought that. We focused on our Tunkillia asset, that asset you see in the middle of the map. That is the asset that will take us to scale. We've grown that from 600,000 ounces to 1.6 million ounces over the last 4 years, and we've just published a study showing that that will be a very efficient and profitable large-scale producer. So now we've gone back up to that top left corner, to that central Gawler mill. We published 2 rapid resource updates over the last 3 months. We published an interim study saying that, hey, this is only going to cost us about 30 million Australian dollars to reinstate operations. So we essentially laid out that sort of buffet of saying, here's how we start for a small amount of money in the top left, self-fund and work our way down to Tunkillia. We'll develop that asset, and that's how we get from 0 to 150,000 ounces per annum by breaking it down into smaller stages and starting with a much smaller amount of capital to get to a much larger destination. The Wudinna project that you can see on the bottom there, we've just acquired that. That will be something that we think will actually produce some high-grade blending feed that we will then truck up to our existing mills, as will the Tarcoola project. When we look at that stage 1 operation, there's a clever picture here. This is basically an existing plant. It was built in 2002. We've shown here the components of the plant that we intend to upgrade and modernize, some things that we will add, so enhancements in terms of automation and pre-leach thickener. But the takeaway here is that we have about 300,000 ounces of gold immediately adjacent to this plant. That includes some high-grade tailings, and that also includes about 200,000 ounces of gold at around 3 grams per ton that sits on existing open pit and underground mining development. So this is sort of a walk-up restart with an existing fully permitted mill. We could start this site in operation tomorrow, technically, if we wanted to, but we're going to go through and reinstate the plant, and we'll aim to do this by the end of 2026. We've just started a definitive feasibility study to map that out, targeting a March 2026 completion of that, so we can then go into procurement and commissioning. When we look at the startup strategy for phase 1, what we're actually looking at doing is breaking that sort of reinstatement of the plant into 2 phases. So even though this is what we might think of as a short capital drawbridge to cross, we're actually going to de-risk this a little bit further. We have historical higher grade tailings in an old tailings facility when this mine was producing 5 to 10 gram material. Around the outer periphery of this tailings facility, there is material that grades 0.6 to 1 gram of gold, and it's very simple metallurgy. So our analysis shows us that we can simply regrind this material and recover 70 to 80% of that gold. We'll essentially mine down the shoulders of that sort of higher grade shoulder of this tailings facility. We'll start producing and processing tailings for the first 12 months, and then we'll start integrating that higher grade fresh rock feed. So this allows us to de-risk and stage out the way that we start up operations there. If we do this and start producing gold at the end of 2026 throughout 2027 and ramp up throughout 2027, 2020, 2028, 2029, we might be able to get ourselves up to a nice sort of steady state 35 to 45,000 ounces per annum. Obviously, at that production rate, we're producing a lot of free cash. That will then allow us to fund the development of our Tunkillia project. So Tunkillia is that one that we really scaled up. And this is a little bit more of your sort of standard mid-tier, mid-cap style production asset. 5 million ton per annum, bulk open pit, bulk processing to produce 120,000 ounces per annum. And these financials are modeled at about a $5,000 gold price. The pits are constrained at 3,500 Australian dollars. So at $5,000 gold, this is modeled to produce about $2.7 billion in operating cash, so operating profits. But what's really interesting is the upfront component of that. So you can see there's a very high IRR, equity internal rate of return, and a very fast payback period. And that's attributable to some higher grade material that we have right in the middle of this project that gives it a very strong leg up. And what I mean by that is if you look at the sort of in 3 dimensions on the left side of the picture here, this is sort of a 3-dimensional oblique representation of the main ore body here. Right in the middle of that, this 3-kilometer long deposit, there is a 300-meter long section wherein we have 10 to 30 meters of high-grade material in width within 80 to 100 meters. So the cross-section on the right shows you this. It's 80 to 100 meters of bulk mineralization. This is very low-cost, very efficient mining with a high-grade kicker in the middle near surface. And what that means is when we stage the development here, we will have a starter pit that in the first year of operations is not going to produce 120,000 ounces, it's going to produce 200,000 ounces. And what that means is for the given cost of processing 5 million tons per annum, the cost per ounce is not 2,200 Australian dollars cash. It's less than 1,000 Australian dollars cash. So at a $5,000 gold price, the first year of operations will generate over $800 million in operating profit. At the current gold price, it's over $1 billion. The second stage of the pit expands to include about a total of 365,000 ounces in the first 2.5 years. So again, at the current gold price, this will produce about $1.7 billion in operating profit on a $400 million investment. So it's an extremely fast payback profile. So the lesson in this is not just sort of the efficiency or the sort of economic horsepower of a high efficiency mill like this is, but also the economic torque that you get to marginal grade. So you can see in the columns on the bottom left the difference between the grade in the life of mine and that starter pit. It goes from 0.8 gram to 1.2 gram, but you can see how the cost efficiency is so much stronger that you have such a lower price of production. We would then be looking around ourselves to say, how can we blend more high-grade material into this mill to create more of these really attractive year 3, year 4 style operating profits during the rest of the operation. And this is where we're looking around to what we consider sort of our regional enhancement strategy. The Wudinna project that I mentioned briefly, this asset's been around for a very long time in various different hands. These are the Barnes and Baggy Green deposits. We acquired these at the end of June, completed the acquisition of those rights in July and August. We just published some really interesting metallurgical information, essentially very high recoveries, but more importantly, the preliminary test work indicates that we can probably process this material into a higher grade concentrate quite efficiently. So we can turn recover 90% of the gold into 6% of the mass. And what that means is instead of having to build an entirely new mill here, we can actually just look at crushing, grinding, and floating this into a high grade concentrate. And instead of processing 600,000 tons per annum like the Central Gawler mill, we take 600,000 tons, we turn it into 36,000 tons, and we send 100 tons per day, 2 trucks, going up the highway to tip into our existing mills and supercharge the profitability and efficacy of those mills. Similarly, Tarcoola, this is the asset that sits between the site of our Central Gawler mill and our future Tunkillia mill. Tarcoola was actually the site of South Australia's gold rush in 1893. In the southwest corner of our tenements here, we have a mining lease, and on that mining lease there's about 600 historical high-grade workings. Now, while we were really busy scaling up Tunkillia as a large-scale platform, we wanted to know what created this sort of cluster of high-grade workings. So we remodeled this area. We did brought a lot of new technology in. We also shot some new seismic, and what we were able to model was a structure that was very analogous, we thought, to the one that created that high-grade gold field. We drilled that last year in 2024, and in August 2024, we announced a gold discovery. In the image on your left, you can kind of see blue dots on the left. We call that the Western Silver Zone, and yellow dots on the right. That's what we call the Eastern Gold Zone. We drilled first in the Eastern Gold Zone. We found gold, we extended it. We found more gold, we extended it. And then we drilled 500 meters to the west. And this was the second sort of interpreted structural target here, and we got quite a surprise. So our first hole there is what happened is the highest grade hole we've drilled there. We intersected 6 meters at 4,747 gram per ton silver. That also carries about 13 gram per ton gold with it. So this is an extraordinarily high-grade silver discovery for Australia and certainly for this historical gold field. So we've done a few more drilling programs. We've done more soil sampling, which indicates the potential to grow this. We do have some diamond drilling results. We're currently cutting core and seeing if we can work out what are the structural and stratigraphic controls here. So again, this is very exciting. That's about all we can say about it at the moment. If we can track in on the source mineralization, it becomes very exciting because these things are quite unusual, and thankfully this sits between 2 gold and silver mills. So for us, really, the next 18 months are about taking this platform that we've crystallized now and taking it into commercialization. We'll be looking at starting our stage 1 operations by the end of 2026, and then also taking our stage 2 Tunkillia development through to ore reserve conversion, pre-feasibility, and a mining lease application in parallel also by the end of the year. So thank you very much for your time. We think we put together a very interesting proposition, We have an excellent team. We're very well financed. We have excellent institutional backers, and we'd be happy to answer your questions on the floor. Thank you.
Thank you, Alex. Thank you, mate.